but that is a cost of doing business as an entrepreneur. That is my get out of jail free card. If times get tough, if I need cash, if I find a really good investment opportunity, I have liquidity. A friend of mine sent me a note. He said, Nick, what's your opinion on paying off your primary residence? We just bought a new primary house off market outside of a major metro for an insane deal. I can turn my current house in a popular area of that town into a rental and profit $1,300 a month, or I can sell it, pay off the new house, and be debt free. So those are his two options: to keep that rental house and make that $1,300 a month, or sell it and pay off his new house and be totally debt free. Which one of those two do you think I should do, Nick? Well, I know a little bit about this guy. He's an entrepreneur. He's actually building some short-term rentals. He's got his own agency that does really well. So my answers might be a little bit unique. It might be surprising and it might be different. I also know this person's 35 years old, peak earning years. This answer might be different for somebody who is 60, 70 years old. My return question from him, I needed more information. How much equity does it take to make you that $1,300 a month? If you keep the current house, how much cash do you have tied up in that current house? Basically, if you sold it, how much would you make? So we got two options with this house. We can keep it and rent it out for $1,300 a month, $15,000 a year, or we can sell it and take a certain amount of cash and put it on our checking account. And I also know it's his primary residence. He lived in it for 2 years. So if he sold it, it would be tax-free. It's a huge advantage. So put it another way, if you sell this house, how much would you put in your pocket? He responded, if we sell, we'd make at least $381,000 after paying 6% to realtors and some other closing costs. So my question right back to him is $15,000 per year a good return on investment for $381,000 of tied up capital? The answer is obviously no. It's 4% return on investment. So my answer is I would much, much rather have $381,000 in my checking account than $1,300 per month or a paid off home. So my answer is neither. Sell the house, get that tax-free money since you lived in it for 2 years, and then don't pay off your current residence. He responded, then what would you do with the $381,000? I'd said, having cash on the sideline is a small price to pay to de-risk yourself and be able to take advantage of opportunities as they arise. Having a paid off house, that's the other option. Sell this and pay off your house. Having a paid off house does not set you up to invest if shit hits the fan, and it doesn't protect you from serious risk if you face a liquidity crunch through your entrepreneurial endeavors. I'm going to say that again. The second option, which is sell your rental property and pay off your current residence as a 35-year-old who is an entrepreneur, having a paid off house, it doesn't do either of the two things that could really set you up to make good money. Meaning, okay, option number one, opportunity number one is, or I guess challenge you would face, the first challenge you would face is a liquidity crunch, meaning you're building these short-term rentals, your business starts to struggle, and all of a sudden you need cash. All of a sudden your short-term rentals are not doing well, we're in a recession, interest rates go up, and you need cash bad. Having a paid off house, you really are going to have a hard time accessing that cash. What are you going to do? Sell your house and move your family into an apartment during this tough time? That's a disaster. It's an extremely stressful, traumatic experience. So you can't get that cash out refinance, HELOC, home equity line of credit. Those are not easy to get when things hit the fan, and they take a while. You might take 30, 60, 90 days to get some cash out of this house. That is a big, big, big disadvantage. You're not liquid. A house is not a liquid investment. And another thing is if the shit hits the fan and let's say companies like Facebook, Google, Apple drop down to 10 to 15 times earnings, which hint, hint, they are right now. If you find or whatever your investment thesis is, you find an opportunity. My friend here is an entrepreneur. If you find that opportunity and you got no cash, you got it all in your house, you got $381,000 tied up in your primary residence, ouch, you got no ability to take advantage of a great investment opportunity. So my advice to you, if you're in this situation, again, there's a ton of nuance. I know this person well. What I'm going to say is both those are really bad options. And both those are pretty significant mistakes when it comes to building long-term wealth. Having $381,000 tied up to rent a house that could use maintenance and will have water heaters blow up and appliances that need replaced, and it's not really, what I'm saying there is it's not really the $1,300 a month of pure profit that you think it might be. And having all that money tied up to make $13,000 to $15,000 a year on $381,000 less than a 4% cash on cash return is a terrible, terrible investment. Now, if you could rent it for $2,500 a month, a little bit of a different story, right? That's that's nearly an 8% cash on cash return. It's almost double what I thought he may be able to get. But I would do neither. I would sell the house. I would take that cash-free money and I would put it in my checking account. And everybody would argue with me. They'd say, inflation, inflation, inflation. Nick, that $381,000 is becoming less and less valuable every single day. That, as an entrepreneur, is the cost of doing business. I'm buying a ton of real estate. I'm putting a ton of capital to work. And guess what? I have $3 million liquid that I could get access to in public equities or cash. And of course, it's getting 7% more valuable, less valuable every year through inflation. But that is a cost of doing business as an entrepreneur. That is my get out of jail free card. If times get tough, if I need cash, if I find a really good investment opportunity, I have liquidity. So I look at it as, all right, if you want to be risky, if you want to be a speculator, if you think everything for sure is going up, 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 then use all your cash. Never have any cash. And people say real estate investors are cash poor, asset rich because they have all their money invested all the time. That's not true. The most successful real estate entrepreneurs I know have a lot of cash on the sideline because they know that it is what will protect them from losing everything. There's one rule in real estate, and there's one rule in all business. Do not run out of cash. That is the one rule. Don't run out of cash. It's the only way that you can lose. It's the only way that you can lose everything is to run out of cash. So that $381,000 getting 7% less valuable every year, I'll take that. I'll take that cost as a cost of doing business, and I'll keep that cash in my checking account so that I can A, save myself from a serious problem, and B, have some liquidity to do some significant investing if the market changes and real estate gets cheap or stocks get cheap, or you find a business to buy and you need that cash. Having it in your checking account is a tremendous advantage. It'll help you sleep well at night, and it'll help you be very, very well positioned into the future to take advantage of any opportunities that you find. Hey guys, I have big news. I recently revamped my sales and customer service team at my self-storage company using folks in South Africa. Listen to this English accent.
Hi there, my name is Anton and I'm a sales professional from Gqeberha or Port Elizabeth, which is in the eastern province of South Africa. I've been in sales for about 8 years now with experience in hardware sales with some of the leading brands in the world, such as Canon, Panasonic, and more recently, Red Bull.
Okay, now the surprising part. The person you just listened to is available for hire right now, and they're asking $9 an hour. If you want an introduction, if you want to hire this person into your business or at least interview them, send me an email, nick@sweatystartup.com, and I can make an introduction and offer you $1,000 off the recruiting fee. nick@sweatystartup.com.